Okay. All right. Okay. Let's have a look at your parameters. Okay, and let's start. So when you go to screener, what you can see here, you can see a lot of parameters. First, it's descriptive, fundamental, technical, or all. Okay, and sometimes you can start from descriptive, and you can see that at the moment in our list 7,170 companies. So it's quite a huge range of companies. And sometimes for people who just start in investing, it's pretty tough. Okay, where do I start? Okay, first of all, you can start from going, let's say, exchange. Okay, what exchange would you like to go? Now, for me, it doesn't really matter, so I leave any. Then you can choose market cap. And sometimes it's pretty important based on your strategy which company you're choosing, because like if you look at the huge companies with large cap, do you think they would be more volatile or less volatile as companies which really have small capitalization? Like you probably understand, right? So that the smaller the company, the more volatility has this company. And the interesting thing about that it's again based on your strategy. If you like if somebody is making money like trading several times a month, maybe buying and selling stock, for them it's important to have that company is volatile. Otherwise, they won't make money, right? Because if they bought the stock and sitting on it, and company doesn't move that much, maybe 1-2%, and kind of they don't make any money on that. They prefer stock which moves maybe 10 to 20%, sometimes monthly. Okay. In our case, if we decided to go long, probably we'll go for bigger companies. I'm trying to find companies above 500,000. Okay, let's have a look. 500,000,000, sorry. Okay, micro. So if I put over $2 billion, okay, straight away, look at this, from 7,000 companies, it was reduced to 1,648 companies. So straight away, we cut some companies which are smaller than $2 billion. Then target price, earning dates, I don't look at here, dividend yield. Now, dividend yield, okay, you're saying that you would like to have growing dividends. Unfortunately, in this particular area, we cannot see that, but you can research it further on a later stage. Okay, and at the moment, we just need that company has a dividend, so we can see positive. Okay, that they are paying dividend, and the amount of companies reduced as well. Now, then average volume, IPO date, not that important for me. Sector, probably not as well. Now, sometimes some people they're trying to find specific sectors, so you can go and choose whatever sector you would like to have. Another thing is pretty good is float of short, because some people they play short or they play against shorters, and they see if company has a lot of short volume, so people who sold and went short, what they do, they kind of trying to play when the company is improving itself, but it's still high level of shorters there, people who sell short. And when the company start moving up, what happens, shorters they start closing their position, taking profit, or like closing their losses, and sometimes company can move quite a lot of up. If you look at BlackBerry has this type of movements. Sometimes BlackBerry can move from $9 to $11 in a matter of days. So imagine like 30% for 3-4 days, sometimes a week, it can move up. Then it can stay for quite a while on that level and then can go down again. So it's very, very volatile stock because a lot of people play short and a lot of people play long on that one. So for me, I don't insert it right now. So I'm not interested in that. And so another thing which is you can choose country as well. But what I'm looking usually it's options and short. So I prefer company which are optionable. And if you already have been to my meetings or seminars, you already know that I sell covered calls quite a lot. And even if I'm buying an undervalued company for the growth, I still prefer that it's optionable because I can collect some rent. Let it be 2% a month, 1% a month, sometimes and you get lucky and you get up to 10% a month, but I love to collect rent. So even if I am wrong in the sense that and my stock didn't go up straight away, what I do, I just keep renting the share and collecting this rent. It's like dividends, but only every month. Okay, so this is a pretty good one. So we can see that we reduced amount of companies to 1,147 right now, and then we can go to fundamentals. Okay, price tuning. What kind of price tuning we're going to insert? So what's your ideas? Type it in the chat. If we're trying to find undervalued companies, who knows what's the criteria for Warren Buffett? Is it important if they're in your yeah, it's important because price earning ratio, it's basically a return on your investment, okay, on your financial investment. We're not looking at assets right now on the capital because if for instance you're buying company which has price earning ratio 20, which is basically means that if company uh, keeps making exactly the same money year after year, right, so you're going to keep the share how many years? Like if it's making only price earning ratio 20, it means that if you invest 20 millions in that company and that company is making $1 million a year annual, you will have to keep this company for 20 years to make your money back. Now, if the company is like has price earning ratio 10, you will have to have this company only for 10 years. Of course, here it's important like few more things. Like for example, you're looking at growth rate, right? You're looking at margin because sometimes price earning ratio could be squeezed because of margin and other way around. And like you have to look at like in general, but Warren Buffett always looking at price earning ratio below 15. He doesn't go in companies which are higher than that. Okay, so and we can see that straight away we reduced amount of companies 254. Now, if it is a growing company, price earning ratio will be much higher because, for example, if you invested $20 million in a particular stock, and this year stock made that company made $1 million, so its price earning ratio 20. But if they anticipate that next year they double their profit and they will make $2 million, so if you look at forward price earning ratio, it's going to be less. It's going to be only 10, right? And if you look in 2 years' time, it might be 5. So some people are looking at the growth stock, but if you're trying to find growth stock, sometimes it's much better go into low cap companies, okay, because they have higher chance for growth than the bigger companies, okay. And another thing that for some companies important to have cash, so price to cash, they're looking, but for some companies not that important. And that's exactly like earnings per share growth next for 5 years. And you mentioned that you would like to have companies which are growing, and here you can see something like that. So, what, for example, over 5% earnings per share growth next 5 years estimation. Now you have to understand that it wouldn't be precise. It's their opinion, right? But that's what we see over 5%, and we limited to 165 companies. Okay. Another thing is you mentioned it's debt to equity. Okay, and I prefer it's under 0.5. So we can see 71 companies. I'm not looking at price earning ratio, forward price earning ratio, but you can have it, for example, if you look at low 15 as well. And sales growth past 5 years, it's important because if you're looking at growth in the future, it's always good to look at past growth. And for example, at least I can see that it's positive. I just put over 5%, and I can see that 35 companies kept it growing. miss this. For some people, price earnings per growth is important as well. You can choose that. I will leave it right now for current bin because we already inserted earnings per share growth here. We can look if the company was growing this year, earnings per share, and I will just put positive that it was growing. And current ratio, also the important part because if the like debt is quite high, current debt, it's not that good. So I'm trying to find over at least 1.5. Okay, and what can we see here more? Price to book. And again, price to book will depend. Yeah, absolutely. Company needs pretty cash. So you can have it's over 3 if you'd like to, like current ratio, because current ratio is when you divide your assets, current assets, and current liabilities, and the higher the difference, the better. Okay. For me, it's important that like we look at debt to equity under 50%, and here also for example, if company has 1.5 million in assets and they have 1 million in liabilities, so I would rather I look at this company, its company has current ratio 1 or below that, I would probably stay away from that company, because if they have any difficulties, they won't be able to pay that cash. Okay, and so another one, price to book. Price to book is really tricky, and again, like all these parameters, they could be changed, depends on what kind of industry you're researching. For instance, if you're trying to find price to book companies for companies like Yahoo or Google or Yandex, some kind of companies which are service providers, you will discover that they don't have that much assets. They don't have their price to book would be very, very big. Why? Because they are real assets. It's people who work there. Okay. If you look at some companies like financial institutions, sometimes you will look at, for example, Ford or Chrysler, companies would manufacture something, or mining companies. You will see that book value would be there high, and sometimes they are sold below book value, because if the company is getting into trouble, like imagine if it is mining company, it's really difficult to get those assets and sell them somewhere. Okay, Warren Buffett trying to find companies under 1.5. Okay, there is no under 1.5, so we just put under 2, like based on, and we can see we have only 5 companies. Okay, that's how easy to shortlist some companies. Okay, and we can see like the name of the company, its ticker, we can see that sector, industry, and where the company is located, and market cap of the company. And of course, I would never ever buy just based on that research, never. Okay, well, the next step, what am I going to do? I'm going to research it further. And so, for example, let's have a look. Do you know any of these companies yourself? I just heard about Valero Energy, but the rest of them. Oh, Mosaic Company, Basic Materials. I heard this company. Okay, let's have a look at, for example, at Mosaic. So that's what we see about this. So it's included in index S&P 500, market cap 12 billion, income 1.2 billion. So we can straight away calculate that price earning ratio is around 10, forward price earning ratio 11, and book to share $28, and the current price of the stock is 35. Okay, so it's close to book value. Dividends, they are paying dividends. So dividend percentage yield 3%, which is pretty good. Okay, it's optionable, it's shortable. Okay, price to earnings growth, it's 1. Price to sell 1.35. Price to book 1.26. Okay, so we can see that quick race is quite high, 1.9. Current race is 2.7, which is really good. So they have a lot of cash on their account. Debt to equity only like 0.38, and long term practically the same. So it's really good. They don't have that much debt. They still have a lot of debt, but I wouldn't say it's huge amount of debt compared with some companies. Earnings per share, we already saw it's at $3 next year, and we can see that the next year it's $3.18. So their projection is less, and sometimes it's important to know because here we don't see really past history or further history. In order to see that, you would need to go to another research facilities where you can have a look at this. Okay, for example, Finance Yahoo or Value Line or Morningstar if you have subscription, or Google Finance if you want to have a look for free, and there would be 4 years of data. And so what else we can have a look here? Earnings per share growth is 63% quarter to quarter. It's pretty impressive. Probably they had some troubles in the past and now they're recovering. Okay, what short float? 3%, pretty low short float. And the range, it was from 29 to 52. That's what we see. Here it was at $29 level, so recently. Okay, so it makes sense to research this company in a like longer term because Mosaic is a company which I think they produce potash, and it's used in order to fertilize like land in order to grow like food and etc. I know that in that industry there was one company, Uralkali, which has some issues, and they dropped the prices in order to undercut a lot of suppliers. Similar stuff has happened with oil after that. And what happened that a lot of companies like Mosaic, Uralkali, and I think one more company, what they did, their prices practically halved, uh, like quite quickly. Okay, I just try to see. You can see the price for this company in 2009 it was nearly $140. And when I first time saw it, I think in 2014 it was around 60. So it's like half in price. So we can see it's slow turn. It's really competitive, like industry in this particular case. Still, the demand is growing, but like there are quite few competitors on the market, and they trying to undercut themselves in prices. It's like commodity, okay? There is nothing specific about it. You just have to dig it and then supply it, and that's it. And that's what I will do. You have a very good questions why the price fall, because maybe this reason will drive the price even lower, okay? And like you can stay away from that company. And we can see that, for example, on October 21st, so it's only 5 days ago, um, it was kind of outperform, but still their price to $45, and the price is already much higher. I have no idea why they are setting higher levels of price, so they reduced the price level, price target to $45. Okay, and here you can see some news as well and what they're doing about this company. So this particular website for me is good because I can see all this pricing in Russia calculated in one place. So to avoid to do it yourself, because some investors what they do they just get a balance sheet, and after that they insert all the numbers in certain calculators and they get all these numbers themselves. But for you, you might get it all here straight away without kind of spending much time for that. Okay, this is really good service from that perspective. Okay, another service. Okay, just a second. This website looks great, but how you can make sure the published data is accurate. Yeah, you never can be sure about that. Usually they provide data from reliable sources, but of course you have to check it. You have to check it. I deal personally with company called Value Line, and their information reliable there. Okay, I know that, and sometimes even calculation of price union ratio could be different. For example, in some website, for example, if we go to website of Yahoo Finance,